is that it will reduce the amount of Ethereum ETH that is emitted to the market. So post-merge, there will be less supply hitting the market. So if demand stays constant, that should boost up the price.
A year from now, do you think tokens are going to be, a huge number of tokens are going to be registered with the SEC? How does this happen? He's going to scare the hell out of them and start suing people, and they're going to come in and register.
I think a year from now, the large entities, the large trading venues will be in the process of registering with the SEC. I think individual tokens, it's a much longer term. It's not clear whether those will be under the SEC or the CFTC or a new entity. That may take new legislation. That's probably a couple of years. But look, this is normal for a disruptive technology. In the early days of the internet, we didn't know whether you applied state sales tax to internet retail sales. This is part of the transition. But I do think in the next year, you'll see those large trading venues begin to move towards registration.
And let's keep in mind something that Gensler has said, which I think you and I both agree with. Of the 10 or 20,000 tokens that are out there, the overwhelming majority have no need to exist. They're going to go away in the face of this greater regulatory obligation because they're going to realize if they have to do business that conforms with the regulation, it's too expensive, it's too dangerous for them, and they're going to give up. They're going to lose market share. So we're going to see a radical reduction in the number of coins and tokens available, and that'll be healthy.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think. And we have the Ethereum merge happening on Schmeet's a year, and we know that's not by coincidence. And we know the NWO wants to control the supply and demand of any major asset that the masses use. Now, I do think Ethereum will decouple from the rest of the assets the second half of next year. We know the majority of these cryptos are going to be out just because the Fed is going to start raising rates and running off this balance sheet, which we know is going to shrink liquidity, and that money is going to go into the actual cryptos that have use cases. Crypto regulation is also going to run out a few of them, but also, guys, we need crypto regulation in order to bring in that Bitcoin ETF, because you're not going to invest pensions and 401ks without the rules. And we know the purpose of blockchain is to cut out the middleman, which will save money and then also create so much liquidity. You're talking about trillions. And talking about derivatives, guys, we know LIBOR is ending, and then we're going to have SOFR coming from the Fed, and then a Maribor. And you see, if you watch CNBC, you'll see a Maribor running right across the screen. And you know I've done plenty of videos on that. If you have my book, you know all about LIBOR. But that LIBOR rate is going to be ending. The Fed is going to have SOFR rate, which is going to be a secured rate. And a Maribor is going to have an unsecured rate. And we know the derivative market, you're talking about hundreds of trillions of dollars. And I have a feeling that's going to be on a private blockchain. And remember, the Crypto Teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
Which I think people looked over. He said the vast majority of tokens by number are probably securities, but not necessarily by market capitalization. And that's our view. Many of the largest securities are really decentralized. Bitcoin, extremely decentralized, almost certainly fits into the commodity framework. So I actually think you're going to see a natural division. And most of the large cap assets that Rick and I spent talking about probably live closer to the CFTC.
When you say the natural division, what is the natural division? What's going to distinguish something that would come under the purview of the CFTC as a commodity versus a security?
Yeah, I think there are lots of rules, and it's a facts and circumstances case.
Can you give us a simple way? Because people ask all the time about this.
As a general perspective, is it decentralized and managed by a community, or are there individuals that hold undue influence over the direction of that asset or of that token? Is really the primary point of differentiation. Securities laws are in place in part to protect against insiders knowing things that the rest of the community doesn't know.
So decentralization is the key.
Decentralization is the key, Bob.
Okay, and still, we've actually had a whole 15-minute discussion about crypto and haven't mentioned Bitcoin yet. Still, this is amazing. No Bitcoin ETF, and we're not going to have one until what?
I don't see a pathway forward on a Bitcoin ETF in the next handful of months. I don't know if it will need a change from a regulatory perspective or just the passage of time, but the short-term outlook is not particularly optimistic.
Same view?
Yes, although I've been saying that we'll see a Bitcoin ETF within the next 18 months, and I've been saying that for 7 years.
You know, people ask me about what I think of the price of Bitcoin all the time, and I tell them I'm completely agnostic on this, on the price. I don't know. But one thing that strikes me as a useful metric is rates of adoption. That seems to be very important. I see BlackRock starting to embrace crypto. Is rate of adoption a good metric to use at this point when more and more people start paying attention or using it or bringing it in? What's a good way to look at the price of Bitcoin?
Yeah, I think that the number of people who own, which is measured in wallets very commonly, the number of people who own it is a very good metric, and that number is steadily rising. What's interesting is that despite the fact Bitcoin's down 70% from its high, the number of people who own it is unchanged, which means that those who own it are not fazed by this. They recognize this is just, it happens from time to time in the market, and they're not worried.
What I think BlackRock coming in and Schwab coming in reinforces to everyday investors is that Bitcoin's not going away. A few years ago, we might have had a conversation, will Bitcoin matter in the future? I think that's now been settled. That's what those big companies moving in tell you. It's been settled. It's now how big is that future?
And the fact that it's Bitcoin that they chose to launch a fund of is a statement that there's Bitcoin and then there's everything else. Ethereum is getting an awful lot of attention, and deservedly so. They're the Coke and Pepsi of crypto. And that's where investors ought to be really focusing their attention, at least new people into the marketplace. They'll be the last man standing, so to speak. If this thing does blow up, they'll blow up last.
One thing I don't hear a lot anymore was what excited me originally about decentralized finance is the blockchain in general and its value in reducing friction in any kind of financial transaction, whether you're buying real estate, whether you're buying stocks as a clearing mechanism, or whether you're sending $1,000 to your friend in London. Where are we on that part of it, the really radical disruptive part?
I think we're making massive progress. We saw decentralized finance grow up and really work. It even worked through the recent pullback in markets. And you're starting to see things like the DTCC look at blockchain as a way to disrupt the incredibly slow settlement times. You're starting to see congressional hearings about whether we can move derivatives exchanges to a platform that cuts out a huge number of middlemen. I think DeFi will hollow out the middle office of Wall Street.
We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols? Who controls the underlying standards of the future of money will control the future of money.
Powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis, whether it's your job, whether it's in your community, We have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.